Okay, this is our Forex blog for May 31st, 2011. And like most days, we want to buy the strongest pairs, like the CAD today, New Zealand, Euro for most of the day, against the weakest pairs. The Australian was one of the weakest today. The yen was weak last night, and up until about 4 a.m. and it had an hour of weakness right here. Those are some of the weakest ones, and also the pound. 8 o'clock got really weak. 3 o'clock was weak for a couple hours, and then you had a 3 hour, counter trend move up with pretty decent intensity. So let's look at, just the flat out most high probability trades. CAD extremely strong. The only downside about buying the CAD was the weekly and monthly trend down. New Zealand also strong for parts of the night, and all the longer time frame trends also line up. So coming into today, it was extremely strong last night. The dollar was weak at that time, and so was the yen. So last night, you wanted to be looking for New Zealand dollar and New Zealand yen buys. That was the highest probability trade. And look at this. On the charts, a couple hours before midnight, just absolutely exploded up. And that's typically what happens when all the time frames line up. It's kind of a no-brainer trade. If the weekly monthly trend's down, but it's having a lot of strength right now, it could just be a counter trend move, or it's possible that it could be the beginning of a new trend that could switch the weekly and monthly trends later to up. In this case, all the time frames line up and you get this kind of a move. And you also, on a decent sized pullback like this, should be looking to buy, and also looking to buy fib target pullbacks off of previous waves. Usually Fibonacci pullbacks, when a currency is this strong, tend to find high probability areas to get in. And even if you bought this at 75, you're up 15 pips right now. Even if you missed, the explosive 100 plus pip move earlier. Let's look at the New Zealand dollar, which also is very likely to have exploded up. And notice, once it went from underneath to above the hourly, that's a pretty high probability place to get in. You have extreme, nice strong trend right here, and then it went sideways for 30 minutes. This is a pretty high probability place to get in. But when it's above the upper containment band, usually that's where it starts to run out of steam and it reverses. So you want to trade with the trend as long as it's, at or underneath the white band. You can still buy right here. It becomes riskier buying here, and the farther above that, the riskier it is, and actually safer it is to do counter trend trades. So CAD also was very strong today. Let's see what it was before midnight. Yeah, it started getting moderately strong here at 11, and it had a lot of weakness before that, and then the next wave had less weakness. This is kind of oftentimes what you see right before trends reverse. It doesn't mean that it won't go strong only for half an hour, but it's likely after you see this kind of pattern for a reversal, which because the weekly monthly trend were down, you would expect this reversal maybe only last an hour or two or three. This was a multi-hour reversal. But at that time, the dollar was extremely weak, and so was the yen. So you could be looking to buy. Sorry about that. You can look to buy the CAD yen during that time. And look, again, this one also is above the hourly. Just absolutely explodes up. And here's the Fibonacci profit target area which I put on and did analysis on last night. This is a very high probability place where the market's going to stall, especially when it's above the upper containment band. You did get a nice 50 pip move down here. And this is, oftentimes what you'll see me do in class if the market's up too much. I actually will scale into a counter trend sell on these because it's impossible to pick the high or pick the low. It's impossible. So you have to scale in when you see these kind of patterns. The dollar CAD, you would have wanted to sell because you have a weak dollar and strong CAD. And this one was underneath the hourly starting right here. And we have a bunch of counter trend signals showing up on this. So usually on most days when it's at or underneath the lower band, you want to look to do scale in buys. If you draw your fibs from here. Usually this is a pretty decent area to get into a trade. At this exact time, that probably was news related. Kind of wait for the momentum to kind of stall out before you do any counter trend. You might want to draw your trend lines over the bars high. When it finally breaks out down here, you're in. Usually you can expect a 20 or 30 pip bounce minimum when a market is this overbought or oversold. The euro very strong today, but except for 1 to about 3, there wasn't sustained weakness in either of these pairs. So you could have traded this against the Australian. Let's look at the Euro-Australian chart. This is very likely to just have a nice, beautiful uptrend, which you can see it did, just pretty much straight up. Any kind of pullback, you want to get in, pull back, pull back. And when it's above the upper containment band, again, you don't want to be buying here because it's risky. If you did, you might have only made 10 or 15 pips before it went sideways and eventually reversed, which is most of the time what happens. You could have also bought the euro against the yen from 1 to 3. Let's look at the euro yen. So here's 1 o'clock. This one just double tops right here, and you can see incredible strength. The pullback, 1 bar of weakness, and then it kind of subsides, and you might have got into that trade right here. Now, you're also getting a bunch of counter trend signals that are very high probability. Notice my Fibonacci profit target level, which I did last night, somewhere around 11 o'clock last night. You know, did the multi analysis on fibs and fib targets, and this was what I thought the max high today would be, and it was. Anytime you see that and it's above the upper containment band, usually it reverses. And anyone who joins our mentoring program gets these, and you save 40 minutes of analysis yourself every night. You can see this last wave up might have been, you know, the area right here, and this was very strong, so I thought not the first fib level was likely to be the end, but the second one. And there was probably some longer term charts that I used to come up with this, but it nailed the high. And especially when you get some counter trend signals. What are these here? 30-minute trend reversal triangle. You got a 15-minute trend reversal sell. This is very likely to be the end of the move, and I wouldn't necessarily sell it here, but when it pulls back down and comes up again and doesn't even break this high, you might want to go short right here and kind of, you know, wait for a little bit of a pullback. You might have got out here and got back in again here. Notice no strength here the second time up compared to before. You know, it's at and near a very high probability reversal area, and it completely ran out of strength. And notice on the down moves here, incredible weakness. The last move up, no strength. This is a no-brainer trade right here, and boom, it just collapses 75 pips. The dollar also was weak last night, coming up to about 10:30. So you could have also bought the euro dollar last night. You can see this thing exploded up with tremendous strength. Probably was the strongest one. You get a little bit of a pullback right here to the previous week's high, it looks like. And when it breaks out right here, you get in, and you might want to draw your fibs on this last wave up and use that as the place to get out of your trade. Now, once you see a counter trend signal like this, this is a 30-minute trend reversal triangle. That's telling you that the trend's, you know, very high probability is over. You might want to draw a fib on this last wave. I screwed that up. Let me do it again. And when it gets up to these areas right here, especially when they're above the upper containment band, this is a great area to get into a light position and look to scale into your trade here and slightly above there. And this one pulled back, you know, about 25 pips. Went sideways for a while, came back up to this area again, and you might want to, you know, for increased probability and lower risk, draw your fibs off of this and wait for it to get to that area. And look, right at the fib target of the last wave up. It took many hours to get to, but once it hit that level and the strength kind of fell away, it's a pretty high probability place to get in. You can see it again, it fell 35 pips. And then on the last move back up to the highs, this is a 1, 2, 3 reversal right here. It didn't have off the chart strength on any of these bars, and when it kind of falls off a cliff right here, you go short, and it's very likely to pull back to the hourly moving average, which is right here in the middle. This is a good place to get out of your trade, around 73. You're short somewhere up here at 01 with about a 25 plus pip move on that trade.